Hi again, everybody. Good morning and welcome back for the 6th Annual Energy Storage Summit. So as the announcement said, we are continuing on with the afternoon sessions. So please feel free to ask our presenter any questions, pop them in the chat and we'll get them answered at the end of the presentation. So continuing on in the vein of disruptive technologies and alternatives to lithium ion, we have next George Hilton, the Senior Energy Storage Analyst at IHS Markit, who will be telling us about the 3 key factors which affect the outlook for disruptive technologies. So before we start, just again, like to remind everybody about all the networking functions, including the interactive Q&A that we have going on, and say a big thank you to all of our sponsors and partners who have helped make the event a success. So I hope everybody is enjoying so far, and I'll hand over to you, George. Welcome on stage.
Thanks, Lucy. Thanks for that introduction. As you said, my name's George Hilton. I'm a senior analyst at IHS Markit, and we are a leading provider of data and analytics to many industries around the globe. I specifically focus on energy storage and clean technologies. And today I want to answer what I think is a kind of fairly pressing question for the industry, in that what needs to happen for alternative energy storage technologies to be successful in the market that we see today. And we really see that there are 3 key factors affecting alternative technologies. Firstly, a growing energy storage market is clearly going to be of benefit to alternative energy storage technologies, as a rising tide lifts all boats. But another key factor there is whether those alternative technologies are actually able to beat the incumbent technology of lithium ion in the marketplace today. And finally, what is the availability of long duration opportunities in the energy storage market at the moment and in the future? We think these are 3 key factors affecting alternative technologies, and I'm going to go through them in turn through this presentation today. So firstly, is the energy storage market growing? I think this is a fairly easy question to answer. The answer is yes, in short, it is growing. And in fact, 2020 is going to be an incredibly exciting year for the energy storage industry. I've tried to show that on this chart here, which shows the change in installations in megawatts compared to the previous year. So when the bar is green, the energy storage market is growing. And when it's red, that indicates that the market shrank that year compared to the previous year. So if you look at 2021, you can see it's going to be a record year for growth, significantly higher than we've seen in any other year. And that's as installations will exceed 10 gigawatts for the first time, increasing from 4.5 gigawatts in 2020. So we'll see growth of over 100% in the market size this year. And I think that's going to be a turning point for the industry. With such high installation levels this year, particularly in the US, the bankability and reliability of the technology will really improve and enable wider adoption elsewhere. So 2021 is going to be a year of huge growth, but what about after that? Well, I think we stand at the start of a period of prolonged and strong growth for the industry right through to 2030. And that's what I'm showing on this chart here, which shows annual installations in each year. Much of that growth will actually come from the front of the meter segment, and we anticipate that larger utility scale projects will become the real engines of growth for the energy storage industry in coming years. So the industry is growing rapidly now, and it's going to continue to grow rapidly throughout the next decade. But what's actually driving this growth? Well, we see a number of factors aligning in the energy storage sector at the moment. Firstly, and I think this is fairly clear, is that renewables are becoming a very cost competitive option across the globe for energy generation. And we see, and this introduces intermittency into the power generation mix, which is a clear driver for energy storage. Secondly, battery costs are falling rapidly, and that means that the services that energy storage offers can increasingly be given at better value to utilities, developers, and regulators. In the behind the meter segment, customers are increasingly looking towards energy storage as a way of providing reliability and energy independence. And finally, and this has been particularly the case in 2020, and we expect to see it being a growing driver in the future, is the political will to increase decarbonisation efforts across the globe. And when we look at these kind of 4 factors, I just want to say that they're all growing at the moment, and these drivers are really increasing, and that will really shape the energy storage industry of the future to become a much more mature market and provide more critical services to the energy industry. And I want to demonstrate that on this slide here. So these charts show the year-on-year growth for various markets around the world, plotted against their market size. And in 2020, you can see it's a fairly scattered picture, with some markets relatively small with very high growth, some markets large with high growth, and some markets even reducing in size. And this is, but as we look forward to 10 years time in 2029 to 2030, we see a slightly different picture where markets have lower but still very strong growth, up to 25% year on year for some markets. But those markets are generally larger, and this is indicative of a more mature market, bringing with it bulk opportunities for energy storage. So I asked at the start of this presentation whether the market will grow. I think the answer is clearly yes. The energy storage market is clearly growing and will continue to do so for the next decade. That's important for alternative technologies, as they will have more space to find a niche or an opportunity to grow within this wider market. However, to do that at scale, they need to tackle the second point of my 3-point list. They need to be able to compete with the incumbent technology. So can they do that? I think to address that question first, we need to look first at what the incumbent technology is and how it's performing in the market. It's clearly lithium ion. I think that's relatively obvious. And this chart on the left shows the annual lithium ion battery demand globally through to 2030. So within that lithium-ion space, you can see that by the end market of energy storage in teal at the top of each of these bars is only a really small part of the global lithium-ion market. And this means that the scale of the lithium-ion industry is huge compared to the scale of the energy storage industry. And that presents a number of opportunities, but also challenges for this industry. Firstly, that scale and the demand in the automotive sector have really enabled the dramatic reductions in the price of lithium-ion batteries that we've seen to date. And it's also helped to develop a global supply chain for lithium-ion batteries that enable them to reach every corner of the globe. And that's clearly played a strong and important role in the growth of the energy storage industry that we've seen to date. However, from a technological perspective, all the developments in lithium-ion batteries will be dictated by the automotive sector, and significant investment from that sector is really driving the innovation in cell chemistries and cell manufacture. And those aren't necessarily well suited to what we need from the energy storage market going forwards. And clearly as well, with lithium-ion being such a dominant technology in this space at the moment, it sets a high precedent for bankability and scale that new technologies will need to meet in order to be competitive with lithium-ion. So these factors have clearly been positive for the energy storage industry, but as we look to alternative and disruptive technologies, it's important to understand what options there are and how and what we need from these alternatives to lithium-ion. So lithium-ion is clearly an inherently well-suited technology to high-power applications. But when we look at the potentially disruptive alternative technologies, a clear pattern emerges here. they're all well suited for longer duration applications than lithium ion. So I've brought out a list of the different technologies on the left here, and we see a wide range, essentially from flow batteries through to mechanical and thermomechanical processes that actually look a bit more like conventional energy assets than batteries do. So for these long duration applications, the key attributes we need from these technologies will be slightly different than what we need for lithium ion and the standard energy storage applications today. Firstly, these technologies will need to be scalable. The challenge in the long duration storage segment is one of bulk time shifting of the generation of energy. And even if this remains over a relatively short duration, in terms of long durations of around a day or so, if you're solving supply and demand mismatch at a country scale, you really are looking at significant quantities of stored energy. And following on from that, the costs clearly need to be very low. If this technology is to be deployed at scale, then it needs to be deployed at scale and low cost. And thirdly, I think, interestingly, these assets won't be cycled as much as the energy storage assets that we see today. The cycle life becomes a less important factor because of that. And instead, investors will need to look to calendar aging as a metric for project life going forward as we switch to longer duration assets. And then finally, and I think most importantly, and I touched on this in the previous slide, investors will need to trust that the technology that they're investing in is effective and robust in order for it to be bankable. And this is a very tough hurdle for alternative technologies, which are often unproven. And they haven't necessarily benefited from the scale that lithium ion has in the automotive sector. So what I want you to take from this slide, though, is that the opportunity for alternative technologies is tied to the value available in long duration applications. And that's because that's where lithium ion is least competitive. So the duration of the system is clearly an important factor when assessing these different alternative technologies. And I want to show an example of that for flow batteries here. So these charts show the levelized cost of capacity for lithium ion and flow batteries both in 2020 and 2030. Levelized cost of capacity is a kind of measure of the annual revenue needed per kilowatt of discharge capacity, which will cover the target rate of returns and the fixed and variable costs associated with that asset. So as you move to higher durations for lithium ion, you simply need to add more cells. And so we see a relatively linear relationship between duration and cost for lithium ion batteries. That's not the case, though, when you look at flow batteries. If you want to increase the energy capacity of a flow battery, you need to increase the size of the tanks associated with it and the amount of electrolyte that's in those tanks, which is a much cheaper way of increasing energy capacity than building an entire new flow battery next door, for instance. And so this means that as a technology, flow batteries become more competitive with lithium ion at higher durations. At the moment, though, or last year in 2020, when we did this study, flow batteries weren't necessarily competitive at any of the durations we looked at. Looking forward, though, we expect that that situation to change slightly. So in 2030, we anticipate a time where flow batteries will become a relatively cost equivalent option at the 8-hour scale compared to lithium ion. It's important to note here, though, that from our analysis, there is no clear price winner, and so developers will need to find additional reasons to choose flow batteries or other alternative technologies other than just price in 2030. And so can alternative technologies beat the incumbent? Well, lithium ion clearly has a very strong grip on the energy storage space at the moment. but there is a route for alternative technologies to be competitive in the long duration space in the coming years. So clearly then an important consideration for these technologies is how will the outlook for that long duration space develop. And we have seen some interesting and promising signs in 2030. Firstly, in the US, a new tender came out for a minimum of 8-hour duration storage in California, which really was the first procurement we've seen of this kind of duration of storage, and potentially marks the start of this kind of longer duration market in this region. Also, generally, we've seen a lot more solar plus storage tenders recently, and some of these, such as the one I've highlighted here in Israel, are relatively large and also have a duration of 4 hours, which is relatively long for lithium-ion. And finally, I want to bring out this example in South Africa, where a technology agnostic tender is looking to procure 2 gigawatts, sorry, of dispatchable generation capacity, which will need to be available between the hours of 5 in the morning and 9:30 at night. And if we look at that tender and look at the opportunities for solar plus storage, that would need to be a very long duration of battery that for the developers to be successful. And so you can look at that tender as a test for long duration storage. The results haven't yet been announced, but I have seen that some solar developers have bid into that tender, so it's an exciting place to watch. Each of these opportunities, though, are relatively small and sporadic, and if we look to how the long duration opportunities for energy storage will develop in a more bulk way, in a larger scale way, particularly in Europe, then we need to look to the wholesale markets. And the route to adoption of long duration assets here is pretty clear, I think. There are 3 key things that need to change from what we're seeing now. Firstly, we need to see an increased regularity of revenue generation opportunities. At the moment, we see a kind of sporadic peaks and troughs in wholesale prices, which enable energy storage devices to kind of to make the most of those and gain revenue when those happen, but it's not a reliable, continuous source of revenue. So that will need to become much more regular. Secondly, the duration of those peaks that the energy storage assets are exploiting will need to become a little bit wider. So we'll be looking to move away from, the peaks of around an hour or 2 of high prices to a more regular pattern of 8 hours of high prices followed by 8 hours of low prices, for instance. And finally, the gap between these peak and valley prices will need to widen also. The long duration assets do less cycling, as I've mentioned, and so there's a greater requirement for profitability for each cycle for the same rate of return when you compare it to assets operating today. So once all 3 of these factors align, I think there'll be an opportunity for long duration storage in the multi-gigawatt scale in Europe. But for energy markets to respond in this way, then there needs to be significant changes to the generation, including much higher penetrations of renewables and a significant reduction in the size of the thermal fleet. However, we do see these changes happening in the coming years. And that's what I wanted to show on this final slide here, where we look at our outlook for the greater than 4-hour duration segment. And you can see the we see opportunities really picking up towards the end of the end of the decade. However, if you look at the blue line, that shows the average duration of energy storage installations that we're expecting in the market, and it doesn't really increase beyond 2025. And that's because the opportunities in the 2 to 4 hour segment are really going to be growing at least as quickly, or not, if not more quickly, than this longer duration segment. So whilst the opportunity is clearly there for long duration assets, in our view, it's one that will really come to fruition in the post-2030 period. So I mentioned right at the start of this presentation that there are three key things that need to happen for alternative technologies. Firstly, we can say that the energy storage market is definitely growing. A rising tide lifts all boats, and so alternative technologies will be able to find more opportunities as we look forward in this growing market. However, I think there are still some open questions about how competitive they will be with the incumbent technology. Lithiumion clearly has a strong grip on this market segment at the moment, and particularly in the long duration segment in the future, alternative technologies will need to prove their reliability and bankability to be successful. And finally, the availability of those long duration opportunities isn't really there at the moment. But we have seen some glimmers of the start of that market, and we will potentially see that really coming to fruition and providing much stronger opportunities as we look beyond 2030. That concludes my kind of prepared remarks today. I'm happy to spend some time answering any questions from the audience, though.
Great, thank you so much, George, for that presentation. Just whilst we wait and see if the audience have any questions, and just a reminder, if they do have any, to put them in the chat box or in the portal, and we'll get them answered. I was just wondering if you had any. So obviously today is a day all about long duration disruptive technologies. We've got a couple of presentations around thermal storage, and we've got a panel around gas and hydrogen later as well in the afternoon. So I wondered if you had, aside from flow batteries, if you had any kind of insight or I guess predictions in terms of the most promising for long duration, or out of the kind of alternative technologies aside from flow.
Yeah, it's a really good question. So we've seen, I mean, it remains a space where there's a lot of disruptors for sure. There's a lot of kind of young companies that are starting to do fairly radical ideas. I think like gravity energy storage would be amongst that, I would say. And there's some potentially very attractive cost kind of assumptions that I've seen in that space. However, I think for all of these technologies, we need to really see them being deployed and financed before we can really say what's going to take the mantle, I guess, off lithium-ion going forwards. I think they've all got positive comments and negative attributes, but yeah, I would say if we look other than flow batteries, I think compressed air is clearly going to be playing a strong role going forwards. Gravity storage, as I mentioned, has a really potentially strong business case, but is geographically limited to mines, and so there are a few issues there. Yeah, I see it as being a kind of exciting and interesting place to look at going forwards for sure.
Yeah, definitely an exciting place to be with all of the, yeah, as you say, new players and new technologies coming to the fore. So we've got a question coming in around the impact of black swan technologies on the storage market. So this is actually new to me, but something such as nuclear fusion.
Yeah, it's new to me too. I'm not sure entirely what the question is, but I think to comment on the nuclear option there, I think this isn't necessarily based around long duration or disruptive technologies for the energy storage space, but I think the strength that we see in renewable energy and the really low costs that we see in terms of the generation of energy from that space really makes it difficult for new build nuclear, including fusion, in fact, to make any kind of inroads. I think to choose nuclear over any renewable asset now is going to be a choice that's quite difficult to make just from a financial basis. There are questions around balancing and how that's going to be achieved. I think clearly energy storage and long duration energy storage has a big role to play there, and also low carbon thermal generation also clearly a role to play there. But these kind of expensive nuclear power stations I don't see being particularly competitive going forwards.
Yeah, definitely. Well, I hope that answers your question on Black Swan technologies. We've got one coming in as well about, so we often hear about the safety of flow batteries as an advantage over lithium ion. So is this realistically likely to become a differentiator, or can lithium providers provide assurances on their product?
It's a really good question. We've seen a number of fires in the energy storage space, both in the UK and Korea, and it is a really important topic that I think the industry needs to take very seriously. Previously, though, we've seen much more stringent safety standards coming into force in the US, and those will require fire suppression systems and redesign of the BMS in order to increase safety. And so I think there's definitely kind of progress being made on that side from the lithium ion space. I think also it's worth, from the lithium ion side, to mention that there's a shift kind of ongoing in the industry at the moment, away from NMC cathodes, more towards LFP cathodes, lithium iron phosphate, and these are generally a bit cheaper, but B, safer. And so the fires that we saw previously were all on NMC batteries, and I think going forwards, concerns around that will be much lower with LFP chemistries. So if you look to compare it with flow batteries, I think there is clearly a safety benefit from going to flow batteries, but with the new standards and changes in cell chemistries, I think lithium ion will be seen as a safe technology going forwards as well.
Yeah, I agree. There's definitely a lot of, as you say, innovation in terms of kind of battery design and move to different chemistries going on. Something that we're looking at in quite a lot of detail in our US summit, which is taking place next month. So yeah, definitely something interesting to look at. And so we've got a couple more questions that we've definitely got time for. So to the extent that long duration storage is a strategic asset, what role is there for system operators and governments when it comes to owning and funding these?
That's a good question as well. I think in terms of government and kind of public funding in the energy storage space, it's mainly looking, well, I guess, two real areas at the moment. Firstly, we see a lot of government-supported expansion of battery production facilities, particularly in Europe. Lithium-ion battery production facilities for that. I think that links into a more kind of strategic role for regions to try and build production and manufacturing facilities and kind of capture some of the value that they see in that kind of growth that in the automotive side. So that's really funneling a lot of the kind of government funding in energy storage at the moment. And secondly, R&D is clearly a really important, has a really important role to play, especially for these new and alternative technologies. I think there's clearly a lot more R&D to be done, especially for these disruptive technologies. And so those are the two real routes I see for governments and public bodies to have funding and affect the market, I guess you could say.
Yeah, definitely. And sorry, I actually completely forgot earlier, when back on the point of safety, we do actually have a panel next week on the 2nd of March at 3:30, so that's GMT time, talking about how to ensure safe framework for lithium-based systems. I think this will be a really, really interesting discussion. It's, we've got Lion Tamer on that panel as well, who I'm sure a lot of you will know, who are obviously looking very, very deep into the safety aspect of lithium ion. We also have the London Fire Brigade on that panel, so that's something to look forward to as well. And finally, going back to the questions, so we've got somebody saying here, the flip side of large scale storage is large CapEx requirements. So where do you see the funding coming from for these large scale projects, which aren't expected to pay off until 2030 and onwards?
Yeah, I mean, I think the question there really hits a really serious issue for these long duration assets on the head. You know, to have much bigger systems that are doing this kind of bulk energy shifting, they need to have much higher CapEx, and that really means that the business case isn't feasible right now. And that's why we need to see much stronger changes in the wholesale market in order to build the kind of use case that will be able to build a business case around these longer duration assets, because they are more expensive than the lithium-ion batteries that are being installed today. I just want to kind of one of the things that I'm kind of looking into at the moment as well is the role other kind of non-storage technologies can play in this, such as demand-side response and vehicle to grid. Because I think if you think about the CapEx, these have much lower CapEx requirement than an actual asset that you're building and putting onto the network. And so I can definitely see these kind of I guess software solutions with distributed hardware that's kind of owned by customers, really playing a much stronger role in these in this peak shaving and bulk energy shifting requirements that we see going forward than perhaps some people expect. And that's because of these really low CapEx requirements compared to energy storage technologies. That's something we're going to be working on over the next few months, though, and I'm looking forward to engaging with people on that topic as we go forward.
That's very exciting. Looking forward to hearing more about all of that research and that work. So I think unless there are any other comments or questions from the audience, we can leave it there. But I did just want to ask, I don't know if this is too far ahead, but going back to the slide where you're talking about you know, the growth kind of shrinking in larger markets in 2029 and 2030, what do you think will happen in terms of energy storage growth for those larger markets, or does it kind of remain to be seen?
Yeah, it's a good question. I mean, I like that slide because you can kind of point forward to 2030 and say the growth is going to be a lot lower. But a lot of these markets are still growing at 25% year on year. So it's still a period of really high growth. If you look towards, you know, the big markets of China and the US, I think we're still expecting around 10 to 20% growth year on year. The point there is that these markets will just be more mature, and that the opportunities for energy storage will be wider, and they'll be doing much more of these kind of bulk time shifting applications rather than the kind of smaller ancillary service applications that we see as dominating the market today and over the past few years.
Okay, great. Thank you very much, George, for your thoughts and for your slides. Really enjoyed that. So yeah, as I said, we've got a couple more presentations coming up. The next one is actually from Watlow, and it's talking about thermal storage from a holistic viewpoint. So anyone interested particularly in that technology should jump in. It's starting in a couple of minutes. But thank you very, very much, George, for your presentation, and I look forward to speaking with you again.
Thanks, Lucy. Speak soon.
Thank you, everybody.
Thanks,
Cheers.
everyone.
Bye-bye.
Bye-bye.